The Jamaica's stock market is turning heads, and not just within the Caribbean. FIDA Investment Bank founder and chairman Bob Corina, a leading figure in Kenya's financial sector, has called for his country to study the Jamaican Stock Exchange, JSE, as a potential blueprint for growth. Corina, who recently visited Jamaica, made pointed comparisons between the JSE and the Nairobi Securities Exchange, NSE, highlighting the stark difference in performance and scale between the two markets. Jamaica has a population of under 3 million, but boasts over 120 listed companies, 92% of them local, Corina noted. Kenya, with 55 million people, only has about 65 companies listed.
Last month, 2 months back, I visited Jamaican Stock Exchange. The population of Jamaica as an island is only 3 million. And they have listed 120 companies. 92% of those are local companies. Here in Kenya, we are a population of 55 million. We only have 65 companies. You can imagine. So we went as I was representing Rwanda Stock Exchange as the chairman of the exchange in Rwanda to fact find what is it that they do that we are not doing here. Why should companies be running into their market and we are not successfully doing it here?
That contrast, according to Corina, is both sobering and inspiring. At the heart of Jamaica's success is its junior market, a segment that has proven to be a powerful engine for growth among small and medium-sized enterprises, SMEs. Corina emphasized one key incentive: companies listed on the junior market enjoy a 5-year corporate tax holiday, a major draw for entrepreneurs looking to access capital. Kenya should introduce similar market strategy like Jamaica, Corina said, especially how to create policies that unlock funding for SMEs and drive inclusive economic growth.
What we found was that there is a segment they call junior market. It's like the mid-tier segment. Anybody who wants to list in that area, you don't pay any corporate tax for 5 years. And then for the next 5 years, you pay only 50% of the corporate tax. In Kenya, there was a time if you are to list in the market, you'd be paying 20% of the corporate tax, which was discounted from the 30%. So this is something we felt should be introduced in the regional governments to know that it will help the companies or the exchanges to increase the numbers of listed companies, which will grow by not paying the corporate tax, because that money which they were to pay as tax is reinvested back in the market. So it's something that we need to lobby with, probably talk to our Capital Markets Authority, tell them to request the government to support this so that it can go. Another thing we found in Jamaica is that the people who market the product is not just the market players. The stock exchange does a lot of it. It goes in the field, talks to people about the benefits of the market, and then once they're able to tie in something, they invite the stockbrokers and the investment banks to come and pitch on that.
There is growing recognition that Jamaica's capital market is punching well above its weight. In fact, the Jamaica Stock Exchange, JSE, has been celebrated globally as one of the top performing exchanges in recent years. In 2018, Bloomberg ranks the JSE the best performing stock market in the world, recording a 29% surge in USD terms. That performance continued into 2019, with returns exceeding 34%. Read more at JamaicaLiveNews.com.